working. I don't think it's working. Okay, looks like I'm live in some places, but maybe not all the places I'm supposed to be. So that's a new one for this week. But today is Monday, November 4th. Welcome to November and another Monday Market Update with Kristen Mason Coreas, owner of the Homes by Mason team. You may or may not have noticed I was not here last week. I just couldn't make it happen last week. I actually had a super long home inspection last Monday. It was a big house and many hours. We actually had a full home inspection contingency, which is a wonderful thing to have. Or was it? Well, it was a void only home inspection contingency, but we were able to do the full home inspection. So big house, great home inspector, thorough job. We were there for many hours, and then it was lunchtime, and then I had to get a little bit of work done and then pick up the kids. And so my Monday was gone last week. But I did do a quick market update in a minute on Instagram, so you could check that out. But anyway, here we are another week later, and let me share with you what is going on this week. Interest rates did go up again for the 5th week in a row. 5 weeks in a row, interest rates have gone up. So we're back to a place we were not that long ago. Near 6.72% is the average as of last Thursday, up 0.18 from the week before. You can see down here is where we've been in the last year. We've been as high as 7.5 and as low as 6.08. That was sometime in August, I think. August, September is when we hit the low so far for this year. The Fed, lots of things are happening this week. Obviously, there's a very big, very important election happening tomorrow. I hope you go out and vote. I already have voted and will be anxiously watching the results of the election. So that's happening this week. And then the Fed also meets this week. So we'll see what happens after that. The jobs report also comes out this week. So all of those things should impact what happens with mortgage interest rates. What I'm hearing is that we do expect them to continue to come down, but we just never know what's going to happen, frankly, especially with this election. So we'll wait and see. And I've shared with you this before, but I'm going to share with it again. Fumbling today. We are overall in a declining rate environment. So as a reminder, in October of last year, we were at almost 8. So we're at almost 7. So that's, significantly lower than we were in October of last year. So yes, interest rates came down, they went back up, they've come down, and we've gone back up a little bit, but overall we are well below where we were, which is good news. We are also below, generally, if you flip back here, the historical average for a 30-year fixed interest rate is just below 8%, which is where we were. So that's some perspective for you on interest rates, and a reminder that Lisa Sturdivant, a very smart woman, the chief economist for Bright MLS, which is the MLS here in our area, says that we should expect interest rates to bump around, go up, go down. That is what they've been doing. That is what we generally are expecting right now. So, and then maybe after the election, hopefully we'll gain some more stability. So, in economic news, as of Halloween, and then compared to the week before, basically what I want to show you here is things are up and things are down. There's some volatility in our market, and this data shows you that. So they're saying, right, the September dip in rates caused pending home sales to jump 7.4% for the month, which was the highest level since March. And then there was a 0.3% minor monthly gain in home prices in August. This is overall good news. And what I have been talking about is that while prices are continuing to go up at a smaller appreciation rate than we have seen previously. So the growth rate dropped to 4.2 from 4.7. So a lower increase, a lower percentage increase, even though prices do continue to go up. I think that's important to understand. And then they said that purchase mortgage applications rose 5.5% for the week, and we're 10% higher than a year ago. But then if you look at the prior week, mortgage applications had fallen to their lowest level since July as interest rates went higher. Purchase applications had dropped 5% the prior week before, and home sales had fallen to a 14-year low. So we're up and we're down. We're down and we're up. There's some volatility in this market. It is hard to predict what is going on right now. So I think we're just kind of in this wait and see mode. I thought I had pulled that out. Okay, this is my good data that I do want to share with you. The current as of October 27th, what's happening in the Mid-Atlantic region, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey. Contracts are increasing over last year. So more buyers are buying homes in the Mid-Atlantic region, and that is probably related to lower interest rates and increased inventory, which is good for buyers. And so showings are also higher than they were in 2023. So the buyers are out there. Price decreases are falling off compared to previous years, and that also is related to buyer activity, sellers not needing to decrease their prices because buyers are out. For the DC metro area specifically, as of the week ending October 27th, everything was up compared to a year ago, aside from price decreases, which were down, and canceled listings, which were down, but everything else was up. Showings were up. Purchase contracts were up. Time to contract up. New listings, active listings, all up, and median list price up from a year ago. That tracks with what we just saw. Compared to a week ago, everything is down except for time to contract. So showings were down. This was not down. Purchase contracts were up. So that's a up and down. Remember, some things are up and some things are down. The market just overall is hard to predict, a bit volatile right now because that is unexpected. Showings down, but contracts up. Time to contract increased by 2 days. New listings are down compared to last week, but active listings are essentially flat compared to last week, and list prices down, which we would normally see at this time of year in the fall. Prices do tend to come down. So then our hyperlocal data that we run for you, which is for Arlington, Alexandria, Fairfax, and Falls Church. This shows us that week over week, the listings were up a bit, 3.5%, and contracts were down by 21% compared to the week before. So that leaves a number of homes left over to buy, which leaves you with a 77% demand to supply ratio. So I generally do tell buyers now, if any time of year, it's usually this time of year that I like to go bargain hunting with my buyers because inventory is increasing and buyers are decreasing generally this time of year. If you can catch a bargain, if you can find a motivated seller, usually this time of year is when you will be able to do that. So that is your Monday market update for today, November 4th. And next week is a holiday for many people, Veterans Day. I will probably be here still working and sharing what's happening in the market. Anytime you want to talk about what is happening and how it may impact you directly, feel free to reach out to me directly at 571-210-1866. You can call me or text me at that number. You can also email me directly at kristen@homesbymason.com or check out my website anytime, www.homesbymason.com. Thanks for watching and have a great week.